Good morning and welcome to the Killik & Co market update. This week we've had a lot of negative commentary in the press about Brexit, a lot of negative quotes from various politicians. For example, Philip Hammond, the Chancellor, did a speech this week and he said that Brexit was a cloud of uncertainty and he said the government is heading for a hard Brexit. Then we had some quotes from Michael Barnier, the chief negotiator for Brexit, where he said that the talks are at a deadlock. So unsurprisingly, these quotes in the press have caused a bit of weakness in sterling. Sterling has fallen towards the end of this week. But when the pound comes down, that does tend to be good for UK stock markets. The FTSE 100 this week has risen to a new record high. If you have a look at this chart here, this shows the FTSE 100 over the last year. The last record high was reached back in the summer, and yesterday the closing high was a record level of 7,556. And the reason for that is when the pound is weaker, UK companies that earn revenues overseas will translate those earnings back into pounds. If the pound is weaker, that means they can translate their earnings back into more pounds. So that's why the FTSE 100 has hit a record high this week. Moving over to the US, the minutes from the last Federal Reserve meeting have been published, and they did show that the Federal Reserve is quite concerned about the current low level of inflation. This does imply that there is a bit of a lack of demand in the economy at the moment, and therefore the Fed is slightly concerned about raising rates further because that could further dampen inflation. Before these minutes were published, there was a 92% implied probability of one more US rate rise this year, and after the minutes were published, that probability fell down to 86.7%. So still a very high number, but a notable decline once the minutes were published. On a more general note, the third quarter reporting season has begun, so companies all over the world are reporting their accounts for the third quarter of this year. There does seem to be a lot of focus on the US for this particular reporting season, and that's because the dollar has been slightly weaker over the last quarter. If you have a look at this chart here, this shows the US dollar index over the past year, and as you can see here, between June and September, the dollar has been notably lower than it has been throughout the rest of the year. That should be good for US companies that earn revenues overseas, because they will be translating those earnings back into dollars, and with the dollar weaker, that means their earnings will appear to be higher. So I think the opinion is that the US reporting season this year for the third quarter should be very positive. And last of all, you may have heard the phrase sell in May and go away. And this refers to the idea that some people think stock market returns tend to be much weaker from May to October in comparison to November to April. So some people do liquidate their portfolios in May and come back into the market at the end of October. And that's sometimes known as the Halloween strategy. So I thought I'd have a look at some data and just see if there is any truth whatsoever in this. And I found a study by Fidelity which looks at the S&P 500 going all the way back to 1928. And this study shows that the index on average gains 2% from May to October compared to 5% on average from November to April. So it does suggest that the theory is correct and that returns are better for the winter months, but these are average figures and obviously the returns are very different from year to year, but I just thought that was quite interesting. And looking at the week ahead, as I said, it is the third quarter reporting season, so lots of companies will be releasing results over the next couple of weeks. Notable companies for us will be IBM, ASML and PayPal on the technology side. In financials, we've got US Bancorp and Goldman Sachs, and for healthcare, United Health and Johnson & Johnson. That's it from us. Have a great weekend and we'll see you next Friday.